Good day, everyone. It's a new day in the world's financial markets. Today is December 17th, 2025, and this is part number one. Part number one, we discussed the general view of the markets and we shed some lights on where we think the markets are headed in the near term. As usual, we start with gold. You can see here the daily chart of gold, and you can see the 50-day exponential moving average down below here at 4,095 currently. That's considered the support zone. That's where it starts. As far as resistance, we're in it. This huge bar, that one-day bar, the one-day drop of October 21st, from the middle of this bar to the top of it, all this area is resistance. So we have been stuck now a little bit above the middle. Okay, it used to be that the middle was resistance when we rally, drop, but now we are stuck in the upper range. As I mentioned before, the odds are unlikely. It's very unlikely that we will make a new high this year. It looks like the gold will continue to drift sideways here in a tighter range. The range has been tighter until the end of the year. But we still don't rule out a drop to the 50-day EMA, which continues to rise. It's an upward slope moving average. So we are still in a sell zone here. We don't see any change, and we are near the upper of it. So therefore, this is more likely the odds, the risk is higher that we dropped it than we rise in the short term. We expect 3 months worth of sideways move. It's only been about 2 months. Okay, so let's keep that in mind. And as far as movements lately, whether on equities or gold, markets have been moving within their average range. Okay, so the average range on gold is 63 points now. And for example, yesterday, gold rallied about 100% of its average range. That's where it peaked. And then even though it was looking very bullish, life was beautiful, so to speak, the market peaked and proceeded to drop precipitously before it found some sort of support. So this has been the theme with us. Okay, when we rally 80 to 100% of the average range, we're expecting a sort of basically support / resistance. So if we look at the 63 points, we're talking about 50 points from 50 to 63 move from, say, low to high. That's where you start selling. 50-point rally from the lowest point upwards of 63. Vice versa, if the market drops 50 points from the high down to 63 points from the high, it's been area of support. The only exception was the day after the Fed when markets were volatile. But other than that, for the last 3 weeks, markets, all of them, equities and gold, have been moving within that average range. It's very important to know what it is. So it's 63 points. That's based on the last 9 days. That's the average move on gold. So now we move over to the NASDAQ. We can see NASDAQ here defended its 50-day exponential moving average yesterday, okay, successfully, and now we're trying to rise from it. Keep in mind, there's only 2 weeks or so left till the end of this year. The market is up nicely, up 20% or so on the NASDAQ, up 16% on the S&P. This market will have defenders. They will defend those returns, especially with 2 weeks to go. A light economic calendar, and also interest rate policy has been set, and it's pretty much transparent now. So there shouldn't be any surprises. I'm not aware of any new war breaking out. So the geopolitical front is also kind of predictable right now, unless something new happens. And typically they don't happen towards the last couple of weeks of the year. So I don't see any changes. I see market continues to be bullish on equities, likely to close near the all-time highs, somewhere 26,000 on the NASDAQ, and somewhere, where's the S&P here? Somewhere near 6,900 on the S&P. So that's what we have for now. We'll come back at around 9 a.m. Eastern time, talk about the direction which we will be trading in today. Bullish, bearish, sideways. S&P moves within 68 points today. NASDAQ 409. This is based on the last 9 days. This is the average move from high to low or vice versa. Okay, so like I said, expect all markets to trade within those ranges pretty much till the end of the year. Okay, for the most part. We'll come back by 9 a.m. Until that time, I wish everyone the best of luck, and thank you.